Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 19th, 2025, and we're diving into iQIYI's third quarter financial results. iQIYI, a leading provider of online entertainment video services in China, has just released its Q3 2025 earnings report. Joining us today is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss iQIYI's latest financial performance.
Revenue and profitability overview. Let's start with the top line. iQIYI reported total revenues of $938.7 million for the third quarter, which is an 8% decrease year over year. John, what are the key factors behind this decline?
The decline in revenue is primarily due to a lighter content slate compared to the same period last year, which affected their membership services revenue. Additionally, while their brand advertising business saw growth, it was offset by a decrease in performance-based advertising revenue. Overall, this led to an operating loss of $17.1 million and a net loss of $35 million for the quarter.
EPS forecast and actual results. Analysts had forecasted an EPS of -3 for iQIYI based on a survey of 2 analysts. However, the actual adjusted EPS came in at -15. John, can you explain this discrepancy?
Certainly. The larger-than-expected loss can be attributed to several factors, including increased operating expenses and a significant drop in non-GAAP net income compared to the previous year. The company faced challenges in both domestic and international markets, which impacted their bottom line more than anticipated.
Operational efficiencies and future outlook. Despite the challenges, iQIYI has been focusing on operational efficiencies. Their cost of revenues decreased by 3% year over year. John, how is the company managing its operations?
iQIYI has been working on optimizing their cost structure, particularly in content costs, which saw a slight decrease. Additionally, their R&D expenses decreased by 8%, reflecting a reduction in personnel-related compensation expenses. CEO Gong emphasized their strategy to expand their IP-centric ecosystem, while CFO Jun Wang highlighted their leadership in the domestic market, particularly in drama viewership.
Strategic initiatives and market position. iQIYI's strategic initiatives seem to be a mixed bag. Membership services revenue decreased by 4%, while content distribution revenue saw a 21% decline. However, there was robust growth in overseas operations. Can you elaborate on these points, John?
Indeed, while domestic challenges persist, iQIYI's overseas operations have shown robust growth, which is a positive sign for their international expansion strategy. The decline in membership and content distribution revenues is concerning, but their ability to grow overseas and maintain a strong domestic market share in drama viewership is encouraging for future prospects.
Key takeaways. In summary, iQIYI faced a challenging third quarter with a significant revenue decline and a larger-than-expected EPS loss. However, their strategic focus on expanding their IP-centric ecosystem and robust overseas growth provide a silver lining. Thank you for joining us, John.
Thank you. It's been a pleasure discussing iQIYI's performance. Despite the challenges, their strategic initiatives could pave the way for future growth.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on iQIYI's performance in the comments below.